All right, we've got red across the board. Doesn't look like we're going to be getting any positive closes. Still 10 minutes left. Joe Mazzola and Cooper Howard are with me here to wrap the week and look forward to the next one. Joe's the Director of Trading Education at Charles Schwab, and Cooper's the Director of Fixed Income Strategist at the Schwab Center for Financial Research. And we've been talking a lot of tech. We've been talking a lot of stocks. Cooper, let's begin our discussion about bonds. Is it safe to say that this week did not go the way of the bond bulls or the doves?
I think it is safe to say that it did not go the way of the bond market wanted it to go. We saw on the inflation front 2 reports, PPI, CPI, came in hotter than expected. So I think really what that signals is the Fed might be on hold for longer than expected. We've seen already the March probability of a rate cut has really been taken out. And even then looking forward to a May probability of a rate cut, that's dropped all the way to 20%, Oliver. It was as high as just 100% just to start the year or start the month off. So some pretty significant moves in Fed expectations. And I think that that's on the back of those inflation reports. That's the primary reason.
Okay. The market seemed to keep its cool despite that, Joe, particularly the bounce back in the Russell. That's kind of my big story of the week, maybe the surprise of the week, how hard the small caps bought that dip.
I think it should be. I mean, look, we pushed back up towards the December highs and just a whisker away. And I found that very interesting, Oliver, because, the story the last couple of weeks has been, hey, increasing rates just is it's going to really kind of pound the small caps, and they showed a lot of resilience. And so, I mean, look, I think this market is potentially shifting a bit of dynamic from being interest rate sensitive to kind of looking back at strong earnings report and saying, okay, well, can earnings, stronger economic data, can it all coexist within a higher rate regime? And if you look at it, it's easy to just kind of lump everything together and say, well, it's tech and it's communication services that are doing all the heavy lifting, and for the most part, they have. But we've also seen that expand amongst industrials, financials, healthcare. We're seeing large upside revisions to estimates for Q4 for those sectors as well too. So, sticky inflation. What's interesting is I think a lot of times we just assume that sticky inflation is bad for stocks and for companies. But if as long as the CPI is widening out more than the PPI, right? So if you get consumer price inflation higher than producer price inflation, what does that mean? That means expansion of margins, and that means that profit margins can continue to grow.
How much did the data this week, Cooper, indicate maybe what is possible for the next couple readings? PCE still more than a week out. How strong is that connection? Should we be assuming that next read will also be warm?
I think that that's what economists are expecting right now, is that looking at today's PPI report, and the expectation is that we are going to see a little bit hotter than a PCE report. So I think in terms of what that means for the market is maybe if it surprises on the upside, maybe we don't see as much volatility. But still, I think that the trend in inflation, what we've seen so far after this week, has been lower. But it just confirms that it's probably going to be a long and bumpy road to get down to that 2% so far, Oliver.
What did you make of the Fed speakers, Cooper? And then I want Joe's take too on the subject.
I think that the Fed speakers, we heard quite a few this week. We also heard a couple today. They pointed to a probability of about 3 rate cuts so far this year. So I think that that's been in line to what they've been kind of trying to communicate to the market so far. So not too big of a surprise. Market seems to really take it in stride so far.
All right. Joe?
Yeah, exactly. I think maybe outside of Bostic, talking about 2 rate cuts, the narrative's been the same. It's been the same since last time Fed Chair Powell spoke. He talked about 3 cuts, and the market didn't believe him. Well, now the market's starting to believe him, and they say that, okay, yeah, we're not getting that last mile that we talked about, being an easy move down to 2%. It's going to be a difficult move, and as Cooper aptly put it, there's going to be volatility, and I think that the volatility in the fixed income market, while that had been the trade for a lot of the 2023 moves that we saw in the equities, they kind of aligned when you saw volatility in the fixed income. It bled over into the equities. We'll see. Like this is a small sample size, couple of weeks where it looks like there's a little bit of a decoupling there, but that'll be something to kind of keep an eye on. And next week, Oliver, it's whether or not you want to call it a macro event, it's NVIDIA earnings, and NVIDIA earnings have become a macro event. They have the potential to really move this market.
Okay. The story for next week definitely going to be tech and NVIDIA focused. As far as data and the calendar go, Cooper, what's the next big thing we need to look for here?
Yeah, I think maybe coupling on to that, it's going to be a light week next week. So maybe that means NVIDIA's earnings are a little bit more amplified. I'm not an equity guy, so I'll leave that up to Joe and his expertise there. But maybe that can influence some things. It is going to be a light week in terms of economic data coming out next week. I think the highlight's probably going to be the Fed minutes. I would think that, like Joe had mentioned, it's probably not going to confirm too much new information. Probably going to signal that they are open to rate cuts, but they just need to see more improvement on the inflation front, more good data, as Jerome Powell put it. And this week, I don't think it's more good data. So that's why I think that Fed expectations have really been pushed off a little bit for those rate cuts.
Okay. Indeed, pushing them back. Is there a situation where maybe they don't happen at all? Did the odds of that increase marginally? Joe, I'll give you the last word, Mr. Mazzola.
Well, if that's the case, Oliver, then the market's got a lot of repricing to do. And, I've seen a lot of stories today about, hey, what's the possibility of a Fed rate hike? I don't know. I mean, I would think that Powell would probably try to hold off on that as much as possible, as to not shake up the markets too much.
All right. Thank you, gentlemen. Next conversation to finish out this week, Cooper Howard and Joe Mazzola.